Hello everyone. In this video we are going to go through our final exam test review. As you see in front of you on the screen, we have the topics that will be on the final exam. These study topics will be listed in your testing module on Canvas, so you can review them. Okay, the test will cover chapters 9 and then 14, 15, and 16. Chapter 9 was the last chapter dealing with governmental accounting. The big topic in chapter 9 was the reconciliation from the governmental fund financial statements to the government-wide financial statements. That's going to be a big chunk of your test. And the other chapters, chapters 14, 15, and 16, those are the three nonprofit chapters. Chapter 14 was the introduction to private nonprofit chapter. Chapter 15, we talked about colleges and universities. In chapter 16, we talked about healthcare organizations. Okay, so getting to the topics list. Number 1, reconciling items, positive and negative amounts for both required CAFR reconciliations. All right, this is only one bullet point out of how many on this list? 32. But I got to be honest with you, this one bullet point represents probably a good at least 1/4 to 1/3 of your exam. Probably 1/4. So this is very, very important that you understand this topic. Now, go back to chapter 9. There are 2 homework problems in chapter 9 where we specifically talked about the 2 types of reconciliations. The first type of required reconciliation is reconciling the total fund balance of the governmental funds to the net position of the governmental activities column on the government-wide statements. Once again, as a refresher, remember at the governmental fund level, we use modified accrual accounting. But at the government-wide level, we use accrual accounting. There are going to be differences between modified accrual and accrual. And because of those accounting differences, equity is going to be affected differently. And because of that, there are going to be both positive and negative adjustments to get from the equity of the governmental fund to equity of the government-wide statements. Make sure you understand both the positive and negative adjustments. If you understand those homework problems where we went over the 2 types of required reconciliations, the first one I already mentioned, reconciling equity of the governmental funds to equity of the government-wide statements. And the other required reconciliation is reconciling the change in equity from the governmental fund to the change in equity to the government-wide statements. So make sure you are intimately familiar with all of these adjustments, both positive and negative. You will get some homework, you will get some test questions asking you for types of adjustments. And then you're also going to get some test questions where it's going to be specific dollar amounts of the adjustment. And so as an example, let's just say one of the test questions is asking you for a dollar amount. And you have concluded that the dollar amount of the reconciliation is, I don't know, let's say $80,000. But guess what? 2 of the answers in the 4 multiple choice questions, one is going to be positive 80,000, another choice is going to be negative 80,000, and then there'll be 2 other choices, of course. So it's not only okay for you to understand the dollar amount of the reconciliations, I also want you to make sure you understand whether it's a positive adjustment or a negative adjustment. All right, we beat number 1 to death, but it's very, very important. Number 2, the government-wide statements. So basically what I'm talking about here is when you get to the government-wide statements, there are 2 columns, governmental activities and business type activities. And basically what I want you to understand is what funds typically roll up into the governmental activities column and which funds roll up into the business type activities column. Little hint, the business type activities column typically only includes the enterprise funds, and all the governmental funds and the internal service funds typically roll up into the governmental activities column. And the fiduciary funds are ignored for government-wide purposes. All right, number 3, comparisons of accounts that are reported on the government-wide statements versus governmental fund statements. All right, so basically what we're talking about there is, as an example, cash. Would cash show up on both the fund statement as well as the government-wide? How about inventory? How about fixed assets? How about current liabilities? How about long-term liabilities? So I basically want you to understand the commonalities. What would be the common accounts in both types of statements versus where would they be different? And just as a rule of thumb, as we talked about with governmental funds, which use modified accrual, typically we're only recording current assets and current liabilities. All right, so those first 3 bullet points takes care of Chapter 9. The next bullet points are going to take care of all the nonprofit accounting. And once again, this should not be misleading. Just because there's only 3 bullet points for Chapter 9 doesn't mean that Chapter 9 is minimally tested. Chapter 9 is 25%. Every chapter is 25% of the exam. Chapter 9, 14, 15, and 16. Now for the nonprofit stuff. So number 4, we're talking about private nonprofit donated services. Make sure you know the rule for private nonprofit donated services. When is it recorded as a contribution and when is it not? Remember, we have that whole accounting regulation for private nonprofits that says, well, it should be a specialized skill that would have been purchased anyway. If that's the case, we would record a contribution. Private nonprofit asset donations, whether that's supplies, materials, inventory, fixed assets. In any event, it's recorded at fair market value at the date of donation. Number 6, recording contributions without donor restrictions. And right underneath it, number 7, recording contributions with donor restrictions. Now, when we have private nonprofits, which uses FASB standards, it is extremely important when we record any sort of revenue, whether that's contributions or service revenue or whatever the revenue item is. Investment income is another example. We have to record it either with donor restrictions or without. Without meaning the donor gave us the money or we received revenue from another source and there are no restrictions on how we can spend that money. Versus with donor restrictions. Now, the donor restriction could be more of an endowment, which is a permanent restriction, or it can be a temporary restriction. Temporary restrictions are either use restrictions or time restrictions. So make sure you understand how the statement of activities works, and when we record revenue, we have to really stipulate with or without donor restrictions. Number 8, private nonprofit donated supplies, very similar to number 5. It will be recorded at fair market value at the date of donation. Number 9, pledges. Pledges is simply a word that means promise to give. And we need to be very careful. If it's an unconditional pledge, we can record the contribution as either with or without donor restriction. If it is a conditional pledge, that's okay, but we can't record it as a contribution until the condition has been met. Number 10, net asset categories for a private non-for-profit. So with a private non-for-profit, net assets, once again, is going to be broken down between with donor restrictions and without donor restrictions. And the way we record the contributions and the other revenue items will help us determine what those net asset categories are. So make sure you understand how to calculate the net asset categories. If given a whole bunch of information, you understand where those numbers are coming from. Now on the expense side, we spent so much time talking about contributions and revenue items. Now number 11 is talking about expenses. Well, a couple things I want to say here. First of all, the expenses are always reported in the without donor restriction column on the statement of activities. And when we show our expenses, we're going to show it in two broad categories: program services and supporting services. The program services are basically those expenses spent on the core mission of the nonprofit, versus the supporting expenses. They are more of the day-to-day administrative expenses as well as the fundraising. So make sure you know those classifications and how that works. All right, where are we? Number 12, timing of revenue recognition. All right, this is very important. When we get a contribution, that can be recorded as revenue upon meeting these three criteria. Number 1, unconditional. Number 2, non-reciprocal. And number 3, voluntary. The one that takes the most work is really the conditions or no conditions. We need to make sure it's completely unconditional, meaning we don't need to do anything first in order to get that revenue. Completely unconditional. All right, we're definitely going to get it. Now, there's a difference between conditions and restrictions. As I said earlier, restrictions are okay for revenue recognition purposes. Restrictions are basically the donor dictating when we get the money what we need to spend it on. A condition, on the other hand, means we as the nonprofit need to do something first in order to get that money. So for revenue recognition purposes, restrictions are okay, conditions are not. Number 13, accounting for direct costs of special events. So a special event is unique. Once again, I refer you to the statement of activities in your chapter 14. A special event is where the revenue is recorded in the revenue section, and the direct costs for putting on that special event are actually netted within the revenue section. It's actually not shown in the expense section, so that's pretty unique. Make sure you understand the reporting of that. Number 14, the accounting and financial reporting for release of donor restrictions. Now, as I said earlier, if a donor puts a restriction on a contribution, sometimes that restriction is considered a temporary restriction, meaning the restriction sooner or later is going to be met by the nonprofit. Example, a donation was given for a specific purpose. Well, once that donation was spent by the nonprofit on that specific purpose, we can then say the restriction has been released. And there is a journal entry to release donor restrictions. We use the accounts called net assets released. So make sure you understand how that journal entry works and how it's reported in the statement of activities. I keep going back to that statement of activities because it's a very important financial statement. All right, so those are basically the bullet points for the chapter 14. Now moving on to chapter 15, where we talk about colleges and universities. Okay, now colleges and universities are unique because with colleges and universities, we can see that we have both private nonprofit colleges and universities as well as public nonprofit colleges and universities. So chapter 15, you are going to see two sets of GAAP. FASB standards are going to be followed for private nonprofit colleges, but GASB standards are going to be followed for public nonprofit colleges. And pretty much everything you learned in chapter 14, with some tweaks, are going to be applicable to private nonprofit colleges, and public nonprofit colleges are going to be accounted for very similarly to an enterprise fund. So if you go back to the proprietary fund chapter, specifically where we talked about enterprise funds, we talked about water utility funds actually in that chapter, but the accounting that you learn there is going to be very similar to the accounting for public nonprofit colleges and universities, like FAU. Okay, number 17, and now the good thing is both accounting For private and public, they're both accrual-based accounting. So when we buy capital assets, we're actually going to record the fixed assets. And that's number 17. Number 18, tuition revenue recognition. Now, the key with revenue recognition is the fact that we are going to originally report it at the gross. We're going to originally record the tuition and revenue at the gross amount. But the recording is different than the reporting. The reporting, on the other hand, is, and that's what we say here in number 18, the reporting is where we are actually going to report it at the net amount, net of any tuition waivers for scholarships and tuition waivers for scholastic achievement and the like. So, but for those scholarships and whatnot, we use a contra revenue account. Additionally, bad debt, all right, we are going to net that against the revenue as well for recognition purposes. Number 19, financial reporting for tuition. That goes hand in hand with what I was just talking about. Number 20, accounting differences and similarities for private versus public nonprofit colleges. With this one, I refer you to the last homework problem that we worked on in chapter 15, where we had 7 or 8 business transactions, and we recorded those transactions using a public nonprofit versus a private nonprofit university. There are some times where there are similarities. There are some times where there are differences. As an example, grants. When we receive a grant, all right, private nonprofit, we're going to record it as a restricted donation right away. But a public nonprofit, we're not going to record that grant until we actually do the work we have to do in order to recognize the grant revenue. So there are some differences and there are some similarities. Once again, refer you to the last homework problem. Make sure you know them for the test. Number 21 and 22, required financial statements. Make sure you know the specific financial statements, the names of the financial statements for private and public nonprofit colleges. 23, make sure you understand that for public nonprofit colleges, the equity is not called net assets as it was with private nonprofits, which we went over already in this review, but the equity is called net position. And if you go back to that proprietary fund chapter, you will see the net position is broken down in 3 subcategories: unrestricted, restricted, and net investment in capital assets. Make sure you know how to come up with the dollar amounts and what all of these 3 net position categories mean. 24 and 25, I actually gave the example already, accounting for grants, private versus public nonprofits. All right, and now the last chapter, chapter 16. We're going to start with bullet point number 26. Make sure you understand how to account for patient revenue. Well, it's very similar to tuition for the colleges and universities. We're initially going to record the patient revenue at the gross amount, but we're going to report it at the net amount, basically net of any insurance contractual adjustments. So make sure you understand the meaning of the insurance contractual adjustments we studied in this chapter. Number 27, charity services. Make sure you understand that charity service is basically service that we provide, that the nonprofit hospital provides to a person that has the demonstrated inability to pay. And the example I like to give is, treating a medical emergency to a homeless person at 3 a.m. in the emergency room. They're not going to be turned away. They're going to be treated on. But I would assume that everyone would agree with me that they have an inability to pay, and so that is considered charity service. Charity service is basically ignored for revenue recognition purposes. It's not recorded as revenue or a receivable or a bad debt. Obviously, the expenses are still recorded, and the level of charity service will be reported in the footnotes. Okay, 28 and 29, basically equity for hospitals. Private nonprofits, we have the with donor restriction and without donor restriction subcategories. 29 net position for public hospitals. Just like I said a few moments ago with the colleges and universities, we have unrestricted, restricted, and net investment in capital assets. 30 and 31, donated services. So make sure you know how to account for donated services for a nonprofit, whether it's private or public, and there are differences. We already talked about private, and make sure you understand how it's recorded for public. And number 32 is a catch-all, and this is the last homework problem in chapter 16. You will see some accounting differences and some accounting similarities between private and public nonprofit hospitals. So I want you to make sure you know all of the differences. The exam is going to be 40 multiple choice questions. It will be on Canvas. You will need to use a browser with a webcam, a lockdown browser with the webcam. Make sure you are setting it up and following all the directions. I wish you all the best.